Welcome to Tampa Home Talk with your host, native Tampa real estate girl, Katrina Madewell, a full-time, passionate, out-of-the-box thinker, love for home ownership kind of realtor with over 21 years of combined mortgage and real estate experience. Tune in every week at this time for expert advice on everything you need to know about home ownership, finance, maintaining great credit, building wealth, and making your everyday life better, and how you can be financially successful today and tomorrow. Remember, love where you live or let Katrina fix it. Now, here's your host of Tampa Home Talk, Katrina Madewell.
Hey, good afternoon. Welcome to Tampa Home Talk. I'm your host, Katrina Madewell, and we have a right-on-time show lined up for you this week. We thought we would talk a little bit about Obamacare. Now, I don't know if you've caught one of the other shows that I've co-hosted with Darren Mish. He airs on Thursday at 1 on WTAN, DCF, and ZHR. And he's the IRS Solution Attorney Show, and we've talked a little bit about these bills that people are getting, and I'll let my guest today correct me so that I get the name right. But it boils down to our topic for today's show, which is Obamacare. And so we're going to talk a little bit about some healthcare solutions. We're in the open enrollment period for Obamacare, and we're going to talk a little bit about how it may or may not affect you. And we'll talk about these penalties that some of you have seen in the letters that have come over from the IRS. So without further ado, welcome back to the show. We've had you on, I think, about a year ago, but we have John Barie with JB Healthcare Solutions. Welcome back to the show.
Hello, Katrina. It's wonderful to be here. Nice to see you again.
Nice to see you, too.
Have a chance to talk to your listeners.
So you're busy. You're kind of like tax crunch time for the accountants, right? And the end of January through April, that's like their busy season. This is the busy season for you.
That's the way it works. They sit in Washington to say, how can we jam all this into a couple of months? So you put Medicare open enrollment and health insurance, general health insurance open enrollment into a 3-month bottleneck and say, okay, folks, have at it. Let's jam the system.
Is that why they must be on vacation the other 7 months a year?
No, they're busy writing regulations is what they're doing.
Gotcha. So Obamacare, let's talk about this because it's been around for a while. There's a lot of debate, and is it staying, is it not? How will the healthcare system be reformed? All that is yet to be unknown, right? We're going into an election year and that kind of stuff. But talk about Obamacare. Back up for the person listening. Maybe they didn't work or were out of the field or, I don't know, didn't watch the news and didn't really catch what's going on, what's been going on for what has been a year now, a year and a half?
Oh, we're into our third cycle now.
See there, it tells you how much I know. I'm on my husband's insurance. But so it's a federally mandated act that you have to have health care insurance.
The Affordable Care Act, that's correct, yes. Maybe there's two things probably to talk about leading off that address the most common misconceptions that I experience with potential clients and with existing clients. Number one is people say, I don't want Obamacare insurance. Obamacare is not insurance. Obamacare is a set of rules outlined in the Affordable Care Act that establish the playing field, things like essential health benefits that every insurance plan must offer, on and on and on like that. Then the insurance companies step forward, and individual insurance companies around the country offer insurance plans that comply with the criteria and the regulations that are outlined in the Affordable Care Act, a.k.a. Obamacare. So when you buy insurance, you're buying it from individual companies. In the Tampa-St. Pete area, the predominant players are Florida Blue, Aetna, Cigna, Humana, and United Healthcare. Those are the major players. The other piece of information that is perhaps the most important for people to understand is, or the question that you should ask yourself is, am I eligible for a subsidy to help me pay my monthly premiums?
We talked about this a little bit on the last show.
That's correct.
And I think a lot of people still really don't understand how it works.
No, they don't. And so let me try to address that. You answer that question either yes or no.
Because subsidy, I mean, it kind of has like a bad aura around it, right?
It is.
I mean, you think about subsidy and you think about, okay, food stamps, welfare, that kind of stuff.
Correct.
So it's a little bit different in the Obamacare aspect.
Well, it is and it isn't. I mean, it is, if you will, compensation from the federal government that makes health insurance affordable.
My point is, though, I don't think anybody should feel bad about getting a subsidy, when you're required to have insurance based on your income.
No, should not. So that's why the in question is important. And let's deal with the people who are not eligible because that's the easy part. Once you determine your eligibility for a subsidy comes in the form of a premium tax credit. Okay?
So at the end of the year, essentially, if they got a refund of $1,000 normally, they may get a refund of...
No, the tax credit is actually applied on a monthly basis by the federal government.
Monthly.
Yeah.
Okay.
And I'll explain that in a moment. But the point is that if you are not eligible based upon your household income, then you ignore the healthcare.gov website. Don't go anywhere near it. You basically call an agent and deal with an insurance company on a one-to-one basis. What plans do you have that comply with the Affordable Care Act? Show me some options. Here are the prices. I'll make a decision, and then I enroll directly with the insurance company. That's if you are not eligible. Now, let's say that you're eligible. How do you determine your eligibility? It's based on household income. So if you are a single person living alone, that's a one-person household. If you are a family of four, a husband and wife and two children, that's a household of four. There are income limits established. Let's just go over those very briefly for people. If you want to grab a pencil, listeners, here you go. If you are an individual and your adjusted gross income, and I'll get to the definition of adjusted gross income in a moment. If your adjusted gross income is more than $11,770 and less than $47,080, you are eligible for a subsidy. You are in the window of eligibility. If you are a family of four.
So can I chime in on that real
Sure.
quick? Like using your example. And like a great example for a family size of one, this might be somebody that's in college, they've got a part-time job, they're considered an adult, but they might be at that $11,000 price range. According to the chart, they're eligible for 100% subsidy. Is that right?
No, don't use the 100% across that.
That's median?
That's the percentage of poverty, and that just makes it more complicated.
Okay.
Okay.
Leave it to me to complicate the show.
Okay.
So you're listening to Tampa Home Talk. Our guest today is John Barie. And, a lot of our listeners, John, the person listening, they might be in the car or moving in and out. So if you hop on over to tampahometalk.com or catch up with us on Facebook and Twitter, we'll have John's contact information there at JB Healthcare Solutions. He's happy to go over this one-to-one, schedule an appointment so it's not so much all at once. We're bringing you info, but we know that you're probably getting in and out of the car. So
that's correct. And by the way, what we're talking here is about individual insurance. We are not talking about group insurance that is available if you're working for a company that offers that insurance. And the large
so this is your
percentage
self-employed people and,
realtors working on 1099.
Right.
That's the largest component of my client base.
Wow.
Yeah. So here it is, folks. A single person, that could be, remember now, under the Obamacare, children, so-called children, can stay on their parents' plan until age 26. So when you become 27, you can no longer be on your parents' plan. That means that you have to go out and get your individual health insurance. So you're a young person, graduated from college, have your first job, whatever that is, and you are making a minimum of $11,770, no more than $47,080. You're in the window of eligibility for a subsidy. Okay, let's take a family of four briefly.
That's a pretty good amount. I mean, that's reasonable for somebody in their 20s.
Correct.
That they would be in that range.
Yeah. Now, a family of four, minimum adjusted gross income is $24,250, and the maximum allowed is $97,000. So that's a fairly large window. Again, a family of four.
Right.
Okay, it could be a single parent with three dependents, or it could be a husband and wife, a traditional arrangements with two children. Now, what is adjusted gross income? That's the important thing. Adjusted gross income, basically, they call it MAGI, modified adjusted gross income. The government can't just do it the simple way and say adjusted gross. They have to modify it. But the component that's most important is think of adjusted gross income from your most recent federal tax return. The bottom line on the first page of your 1040 is your adjusted gross income. That's where you look to see if you're in the window of eligibility.
It's the number at the bottom where all the dust settles after any deductions. And
Exactly.
That kind of stuff.
That's it. Okay. And so that puts you in eligibility. Okay, now how do you determine the exact dollar amount? That's the next step. Okay, I'm eligible, I'm in the window. Well, there's one way to do it, and that's call me. And I can answer that question for you in under 5 minutes, and I can give you a written copy by email of what your subsidy is. But if you want to do it yourself, there's an organization called the Kaiser Family Foundation, KFF.org, Kaiser Family Foundation. You can Google it. You can look at their site. They have a tool where you put in information about your household, zip code, your income, get that adjusted gross income number. They ask you a couple of questions about your smoking habits because you do pay more in monthly premiums if you are a smoker. And they ask you about your family size, and then you can hit a button and it calculates what you are likely to experience as a subsidy in terms of a monthly payment. And that tool is very accurate.
Wow. Okay.
It also tells you what you're likely to pay for a quote-unquote silver level plan. Every time I open my mouth, I add to the complexity of this.
Okay. So what's a silver level plan? I mean, I'm sure the person listening is thinking that same thing.
Yes, exactly. Okay, so the answer is that the Obamacare plan sets up 4 what they call metallic levels of coverage: bronze, silver, gold, platinum. Nobody today is offering a platinum plan, which is supposedly pays up to 90% of the cost of your health care. The silver is kind of the median that the government uses. It's supposed to pay about 70% of your health care expenses. So they use that as kind of the measuring stick. So for a silver level plan, that's the way the Kaiser Family Foundation tool works. KFF calculates using the silver plan as a measuring stick, but the subsidy is very accurate. What you're looking at then is a specific dollar amount that comes in the form of what's called a premium tax credit. That tax credit basically is an amount of money that is sent by the federal government to the insurance company that you select on a monthly basis in your name. You pay the difference. Example, you sign up for a health insurance plan from one of the companies. Let's just pick Humana. I sell a lot of Humana because their rates are very competitive in this area on the marketplace. Humana plan, and you decide. First of all, you go to you determine your subsidy. We've just been through that step, and you get a subsidy of $200 a month, and you get it in writing from the federal government. And I'll go back to that in just a moment. You pick a plan that costs $300, so it's very simple. The feds will pay $200 to Humana in your name every month. You pay $100 out of your pocket to cover the total cost of the $300 policy.
How often do you ever see where the government messes up and doesn't send it, or something's wrong and it doesn't get applied, and then the insurance policy is canceled? Like, do you see that kind of stuff?
The reason I'm laughing is I'm afraid that I see it all too frequently.
I gotcha.
Yeah.
And that's probably a mess to unwind, like from a consumer level.
It is.
Trying to deal with the federal government.
Yeah, it is.
What's some of the things that you're seeing that cause that to happen? Is it like a digit in the Social Security number, or?
Yeah, I mean, early on, it was just the fact that this computer program that we paid multi-millions of dollars, the feds paid to be set up, was dysfunctional. But what I mean by that is that the feds give you the subsidy, and then they transmit that information to the insurance company. That didn't work the first go-round. Last year, it worked a little bit better. We're hoping that this year, in the third year into this, that bug will disappear or largely disappear.
And again, they've kind of clogged the system because the open enrollment period is from, November 1st through the end of January?
That's correct, yeah. So you've got this 3-month window, which is, there's no other way to describe it than a bottleneck. You put all of this intense activity into a 90-day window. It makes absolutely no sense, but that's what we
they have servers that just can't experience that kind of traffic no matter how much money.
Well, the insurance companies are trying. The feds are trying, but there's still glitches. I mean,
Right.
and that it shouldn't be in this day and age with the technology levels that we have.
So you're listening to Tampa Home Talk. I'm your host, Katrina Madewell. In studio today, we have John Barie with JB Healthcare Solutions talking all about Obamacare and the insurance and the open enrollment that's going on right now. When we come back in just a minute, we're going to talk about some of these tax letters that people have seen. We're going to talk about how to avoid them and some stuff to set you up for success. We'll be back in a minute. Hey, Katrina Madewell here. Just wanted to make sure you know how to reach us on our off-air number. If you'd like to connect with myself or any of our guests, you can call us at 813-377-2775. Again, this is Katrina Madewell, host of Tampa Home Talk, and to connect with myself or any guests we have on air, just call or text at 813-377-2775. 813-377-2775.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darren T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darren T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves, so get MISH. 888-438-6474. Principal Office, Tampa.
Aaron Davis here, owner of Hillsborough Title, serving all of Tampa Bay. Our service, strength, and knowledge make us different. From Polk County to the Gulf, Pasco to Manatee, Tampa Bay, we've got you covered. Visit us on the web at thebesttitle.com. That's thebesttitle.com.
Welcome back. You're listening to Tampa Home Talk. I'm your host, Katrina Madewell. We have John Barie with JB Healthcare Solutions in studio today, talking all about Obamacare, some of the FAQs that you guys get, and the open enrollment, which is going on right now through the end of January. And we actually got a question that came in over the break. Jeff, can you chime in on that question?
If somebody, my wife has group insurance, and I asked you, is she entitled then to one of the subsidies? And you had said no. And if you could please explain that to people out there, because I'm sure they're wondering, oh, I can tell my accountant that I can get a subsidy, I can get a kickback on this insurance. And?
That's not the case.
Okay, explain why.
There is a distinct difference under the law between group insurance, which is a plan offered by an employer to employees, and individual health insurance, as we talked about. The best example of an individual health insurance is a realtor who works on 1099, anyone who works on 1099.
Yeah, someone that's not eligible for a
That's
group
correct.
plan.
So in group plans, by law, the employer is required to pay 50% of the employee's monthly premium. That's why to the employee, it is usually a pretty good deal.
They think the insurance cost is cheaper, but really it's not.
Right. Then people learn what the real cost is when they get the COBRA. Because when they leave the company, they're offered COBRA. By law, they have to be offered COBRA.
Is that still for 180 days? Is that how much it is?
I think it's 90. It may be 180 days. I'd have to check. It's at least 90. It may be 180 days.
Okay.
Yeah. But the idea is once you have lost your employer coverage, you want to go down to individual insurance as quickly as possible, because individual insurance is going to be cheaper than the COBRA payment. I can almost guarantee that.
I mean, here's the thing, too. Like, what about in that particular scenario, at different times of the year, does that apply? Like, would you just get an individual policy until open enrollment is back open? Or how would that work? And then, the subsidy may play a part in that, but you're likely not going to get it until open enrollment, right?
No, what happens then is, let's continue that thought. You lose your job or quit your job, or you lose your employer,
insurance
your group
benefits.
insurance.
Yeah.
Then, and it's after January 31st when open enrollment closes. In open enrollment, anybody can apply for insurance at any time. Once open enrollment closes, we go into what the government calls special enrollment period. And you have to have what's called a qualifying life event in order to get health insurance under Obamacare.
Explain that.
Typical qualifying life events are loss of your job and therefore loss of a group insurance plan. You move from Massachusetts to Florida. You are single and you get married. You're married and get divorced. You're married and adopt or have a child. Those are the more typical. There's another long
or if you
list.
would lose a spouse that maybe carries the insurance, something like that.
Something like that, yes.
So something major.
Something major. That's called a qualifying life event, in which case you can get insurance. If you lost your insurance for whatever reason as an individual and you can't enroll because it's you don't have a qualifying life event, there is short-term medical plans are available, called the acronym STM. Short-term medical plans, you can buy it on a month-to-month basis up to a maximum of 12 months. The difference with that plan is it's not Obamacare compliant, but it does give you health insurance coverage.
Does that still give you a penalty then if you're not Obama?
Yes.
What does that mean?
Really?
Yes.
But what does that mean, too, by not Obamacare compliant? Like, what does it mean?
Well, the biggest difference is that, number one, the insurance company under a short-term medical plan is allowed to ask you health questions about your health. So if you had a heart attack, they have the right to turn you down.
Really?
Yes. That's the old-fashioned way.
Yeah.
By the way, that no longer exists. Under Obamacare, everyone should understand, is that pre-existing conditions no longer are in play. They simply do not exist.
So they're not allowed to ask you any questions. You just have to be able to get insurance in the open market?
It's a guaranteed issue. They are allowed to ask you one health-related question and one only, and that is, do you smoke?
Wow.
And if you smoke, you will pay a higher premium, generally up to 50%
They
higher.
care about that instead of if you already had a heart attack? Does that make any sense?
Well, I mean, that you have to think about that from a realistic perspective. If you smoke, that's a choice. If you had a heart attack, that might not be.
But still, one has already happened. One, you don't know if anything's going to happen. It's an if. It might happen, and you've already had a heart attack, and they don't look at that. Or in
Right.
my case, MS, or and that immediately, as soon as I would say that was, you're done. There
Oh, you
was
were
no
done
insurance.
before Obamacare.
Oh,
And that is
definitely.
probably, excuse me, as far as the Affordable Care Act, that is probably the single greatest benefit to the American public is that insurance companies can no longer discriminate against you because of a pre-existing condition.
What if they find out? Because it's not hard to look and see. I'm
They-
assuming there are loopholes for them not to take you.
No, what's happened is the way this is written as a law, it is designed to collect a lot of money from people who are basically healthy to compensate the insurance companies for the
people that
increased
are.
cost that they're going to experience for people who file a lot of claims because they have poor health for whatever reason.
So can they cancel your insurance?
No,
Okay.
cannot cancel your insurance. In fact, under the Affordable Care Act, it's guaranteed renewable. Now, an insurance company can take a particular type of plan off the market, but they have to replace it with something. And that's happening in some isolated cases, not particularly widespread at the moment.
Why are doctors jumping off the bandwagon of Obamacare? They're finding it harder and harder to find doctors that are actually accepting it.
Well, that's an excellent question. Let's talk about the networks and doctors and providers, which are clinics and hospitals and so forth. There are two basic kinds of networks, what people commonly know as HMO or health maintenance organizations, and then PPO, preferred provider. They go by POS, MC, managed care, that sort of thing. In the in the HMOs, they require basically that you select a primary care physician at the time you apply. And if you don't have one, they'll pick one for you. And I've had a lot of cases where the one that was picked for them people don't like. Right. You just call up and you can get that changed. But you have to pick a primary care physician and then any referral to a specialist. You need to go to a dermatologist, an allergist, a cardiologist, whatever. You have to get a referral from the primary care physician. In the PPOs, they are basically open access, which means that you can go to any specialist that you want at any time simply by making a phone call to that person.
Which
there's
makes
a
sense.
but
Like
there's a
if
price
you know
for
you
that.
need to go see an ear, nose, and throat, you can just make the appointment with them. You
They-
don't have to go to your primary care to get a referral to go see the ear, nose, and throat if you already know you have a history of ear problems or whatever.
That's correct. Now, this is a very important component of this discussion. If you you select one or the other, and then you are in network, and listeners, do not, I repeat, do not go out of network, because now almost all of these plans will exclude any kind of compensation or coverage if you go to an out-of-network provider. Insurance companies are really cracking down on this because of it's part of their efforts to control costs.
Gotcha.
Now, to your question, Jeff,
So that's probably why the doctors don't
HMOs,
like it.
a lot of doctors are dropping out of the HMOs because the compensation that they are offered by the insurance company for routine services they find so low as to be unacceptable. So they drop out of the HMO and they go to the PPO. So the part of the sentence that President Obama didn't finish when he said you can keep your doctor if you like your doctor is if you're willing to pay more. And
There you
that's
go.
the fact.
Because an HMO is more inexpensive than a standard plan, but a PPO, which I have, is much more expensive. But I have the choice of who I want to go to whenever I want to go, and I'm always covered. I have never had a problem, and I go for every little thing that happens. The HMO, I literally had to beg them to allow me to go somewhere. So, folks, before you decide to say, oh, it's cheaper to go with an HMO, you really need to look at the PPO, because there are major benefits to having that as opposed to that
Yeah.
HMO.
And the best thing to do really would be to compare that and get with somebody like John so that you can kind of go through some of those differences and explain them and really break down, it's going to cover this and this is how it works. It's going to cover that and this, here's how this one works. Because, one plan might be good for one family and another one maybe not for someone else.
That's correct, and I think you're on a good point there. Let's just elaborate on that for a moment. When you are looking for health insurance coverage, you really do want to shop the marketplace because there are variables. You do that best with a licensed insurance agent. I happen to be one of those people. There's plenty of them in the Tampa-St. Pete area, as opposed to going it alone. The reason is because these plans are complex. We could sit here and talk until sunset about all of the details related to health insurance plans and explaining them to people. And people would fall asleep, their eyes would roll over. I don't want to know this detail, okay? But I have the ability to shop for you sitting at a computer, and normally what I try to do with my clients is give you 3 to 4 options that have different price points, that have different deductibles, and we need to talk about that before the program is over.
Big differences.
Big differences in deductibles.
Scary stuff.
Big differences in out-of-pocket costs, that sort of thing. And it's hard for people to understand that. So you really want to contact an agent and as opposed to going it alone. And it's very important to understand that working through a licensed insurance agent does not cost you more money than if you bought it online from the insurance company. The insurance company compensates the agent on the backside for bringing them the business.
Right. They don't have to advertise a market for it.
Exactly. So whatever cost you're going to pay is going to be the same with or without an agent. Use the agent.
It's
The other
peace of
thing-
mind, because right up front, they know what it's going to cost. They know that you did it, you're licensed, which not only says that you know what you're doing, but it kind of gives them the peace of mind knowing you dug deep enough to find the information for them, so that you and I don't have to sit there for hours reading
Well, you
complex
also
manuals.
you're going to have access to a lot of these healthcare, and not only their rates, their service, all of that stuff. So you can sort of shop the open market,
Correct.
right?
Yeah.
I mean,
That's the real benefit. And I know what I'm looking for.
right.
When we have a conversation to start with, you tell me the things that are important to you, and that's what I look for.
You'll know the road already to go down to, instead of us guessing, should we be doing this?
Yes.
You already say, here's what you need to be
Yeah.
doing.
And if we've got, we're pointing about time here.
Yeah.
Let's go back for just a moment, because we talked in the first segment about eligibility for a subsidy. Okay, and we explained the methodology in terms of it's household income. You have to be within the certain window. Now the question is, and this is important for people to understand, how do I actually get that subsidy? This is where, to get the subsidy, you actually have to go to healthcare.gov, and you do it in one of two ways. You either do it online, and now the online process seems to be working more efficiently. There are less interruptions getting kicked out, or you call healthcare.gov. I highly recommend you avoid calling healthcare.gov if you can possibly avoid it. Again, you're better off working through an agent. I can take you through those steps. But to get the subsidy, you go to healthcare.gov, and then what you do is you get an official written determination in the form of a letter sent to you that says, hey, Katrina, you get X dollars a month. You got it in writing. You save that. And then you go and sign up for your insurance policy.
That way, if something doesn't happen or you're not getting it as expected, you can revert back to it and hopefully fix it.
Exactly, yes.
So you're listening to Tampa Home Talk. I'm your host, Katrina Madewell. We have John Barie with JB Healthcare Solutions in studio today. When we come back in just a minute, we're going to talk about some of these IRS notices that some of you have seen called the IRS Shared Responsibility Payment. That's your fine or your slap on the wrist if you didn't go get insurance as you were supposed to. We'll be back in a minute.
You've heard this before. Interest rates are at all-time record lows. But if your interest rate is 4% or above, you owe it to yourself to call Silverton Mortgage Specialist. Silverton is a direct lender, and the best part about this is that the entire loan process is handled in-house. From application to close, we do it all in the same building, which means that our loans close fast and our clients know what's going on every step of the way. Our contact info is located on TampaHometalk.com under Radio Show. What makes Silverton different? Products. We offer VA, FHA, USDA, and conventional loans pricing. Best rates with the lowest closing cost. Process everything in-house. It's handled right here and not outsourced to anyone that no one can reach. This way we can avoid surprises. Our people are simply the best, and we know you'll agree. What will closing Silverton Mortgage Specialist mean to you? A smooth process, real home loan value, and personal attention from real professionals. Silverton Mortgage Specialists are here to serve you. Visit TampaHometalk.com under Radio Show for all of our contact details. NMLS 109600 is an equal housing lender and Florida and Georgia residential mortgage licensee.
Curious what your Tampa home is worth? Here's an easy way to find out what homes like yours are selling for in today's market. Text the word value to 813-377-2775 for a free report on Tampa house prices. We'll send you a free report with up-to-the-minute statistics based on all homes for sale sold in your neighborhood over the last 6 months in all price ranges. To get your free report on Tampa Bay house prices, just call or text the word value to 813-377-2775.
Aaron Davis here, owner of Hillsborough Title, serving all of Tampa Bay. Our service, strength, and knowledge make us different. From Polk County to the Gulf, Pasco to Manatee, Tampa Bay, we've got you covered. Visit us on the web at thebesttitle.com. That's thebesttitle.com.
You're buying a house. Congratulations. So while you're worrying about the paperwork, leave the moving part to us. We're Woody & Sons Moving Company, a Florida licensed and insured mover, and we offer same-day written estimates. Plus, no sneaky mileage, stairs, or additional stop fees. All we ask is that you check out our great ratings on Google and Angie's List, then go to woodyandsons.com to learn more. Whether you need a full-service pack and move or some extra hands, at Woody & Sons Moving Company, we move you.
Welcome back. You're listening to Tampa Home Talk. I'm your host, Katrina Madewell. We have John Barie with JB Healthcare Solutions in studio today, talking all about the open enrollment for Obamacare and how this has changed life for some of you listening out there. And so we were, before the break, we were talking about the IRS Shared Responsibility Payment Letter that people have been getting. You've seen some of these, right?
Yes.
What's the dollars look like on some of those? Are they the same?
Well, here's basically the way it works is, and this year, by the way, the numbers are significant. If you are a family, you could experience a fine of up to $2,000 or 2.5% of your income if you do not have health insurance. So you're basically throwing away money. Just do the math. It's pretty simple. It's like $895 per person if you don't have health insurance. And with most plans, and particularly with a subsidy, you can get most of your year, or a good portion of your year, covered for $890.
So you can literally get insurance for what you'd pay in the fine.
Exactly, and that's the whole purpose of the fine. I mean, the euphemism is called a share responsibility payment. That's to make it sound nice, but the truth of the matter is, it's a fine.
To get their
and
attention.
And the Internal Revenue Service comes looking for it. Now, another thing that people have experienced is over the course of the year, they've signed up for Obamacare, they have a subsidy, they're making their payments, and the government's sending money to the feds, or to the insurance company in their name. Then, for some reason, they stop paying. The insurance company has the right to cancel your policy, and guess what? The IRS comes looking to get the money paid back to them that they gave you in the form of that subsidy.
So if they've given a couple $100 a month in subsidy, and they've done that for 8 or 9 months, and then all of a sudden on month 10, you decide that you missed your premium for whatever reason, they can cancel you, and they're going to want all that money back?
Exactly. Yeah.
Wow.
So that's part of it too. So not only do you get fined for not having health insurance, you get fined if you stop your payments. The insurance company cancels the policy. Then the feds are going to look for their money to get their money back.
So how does this play a part, or does it at all, to people that are maybe a little bit older, say they're age 65, they're looking at Medicare? How does this differ, and does it play any part for someone that's looking at Medicare?
No, Medicare is really, it's a world all by yourself. When you turn age 65, you have to go on Medicare. And that's, I don't do any Medicare work, so it's a world that I can't really talk about with any legitimacy.
Right. I'm just trying to understand the differences. So essentially, a lot of the stuff you do is individual insurance for people under the age of 65.
Correct.
Okay.
Yep.
And that's who Obamacare applies to, right? It wouldn't apply to anyone over 65.
The Affordable Care Act is designed, yes, Medicare is a whole different law.
Okay.
Now, it may be, I'd have to look and see where it fits in the Affordable Care Act, but Medicare has its own set of rules and regulations that differ from what we've been talking about, the Affordable Care Act.
Because I think it's important to clarify that, so I just wanted to ask about it.
Sure.
So, and that's huge. I mean, that could be a big chunk of change if you stop making the payments, if you have to repay those subsidies that they've given you.
Yes, I've had a couple of clients call me and say, why did the insurance company up my payments? And the answer is that you lost your subsidy. There's another piece of this that people don't understand, is when you get the subsidy, in this letter I referred to in the earlier segment, it's very common that the health insurance marketplace will say to you, in order to verify and validate your subsidy, you need to supply this piece of information, this form, and you need to do it by a certain date. And if you don't do it by that certain date, the health insurance marketplace will cancel your subsidy. They notify the insurance company. Now the insurance company sends you a bill for the whole thing. People say, what's that all about? And my answer is, did you read the letter I told you to read? And did you supply the information that they wanted at the healthcare marketplace? And the people say, no. Okay, you're not getting your subsidy. Wait for the IRS man to come collect it.
Wow.
Get the money back.
So is there a grace period on these payments? Like they're due, on the 1st, I would imagine?
There is a grace period. I think it's 60 days now.
That's pretty lenient.
It is pretty lenient. So you've got some
if you're traveling and you miss a payment, it's not like you're going to just get your insurance canceled. You just need to pay it ASAP.
The best thing for people to do so that you don't have the annoyance is to make a bank transfer.
Yeah, do an auto renewal.
Yeah.
Question?
Yes.
In between jobs and or job place changes ownership, there was a downtime with my wife of 3 months. And she had her insurance. The new people took over. They dragged their feet on their insurance. Now she's got insurance. Will that show up in Obamacare or during the course of the year saying, oh, you were uninsured for 3 months, you need to pay this amount of money?
It's possible. Again, you're talking about a group situation, and I really don't know all the rules and regulations of group because my focus is on individual insurance.
Wouldn't that be a good match for the short-term medical you were talking about earlier?
Yes, short-term medical is meant for those kinds of circumstances.
The lapses in
lapses of coverage.
They didn't know
gaps.
about those.
Yeah.
If there's a person out there and they are going to change their jobs, and if they don't get the lapse, what is the time that you're allocated that before you get fined for it? Is there a month, 30 days?
60 days.
60 days.
Yeah. If you have a life-changing event, one of those qualifying life events, you use your job, you've got to make the effort now to get insurance within 60 days.
Pretty interesting.
And then that's when that fine can take place.
Then the fine kicks in. It's retroactive.
Ooh.
Oh, so it's not a matter of...
Oh, no. We're dealing with the government
You don't
here.
get a grace period here.
So after 61, expect the letter within the next few days.
Well, not the next few days,
Well,
but I mean, when they catch up with you, that's the way it works.
And at that point, do you owe the entire year at that point?
No, the way it is. It's handled on your tax return now.
Okay.
So it's an annual reconciliation.
So if you're going to get $1,000 back, you're not going to get $1,000 back. They're going to say, no, you owe us $600, so you're only going to get yourself $400.
They're going to get their
Spot
money.
on. They're going to get their money, exactly.
So what are some of the things that these insurance plans cover, John? Because I remember an excellent point that you brought up on the last time we had you on the show. You were talking about how, you really shouldn't abuse insurance. Like your car insurance, if you can think about it like that, you're probably not going to make a claim for a little scratch. You're going to use it if you have a big accident. Same thing with your homeowners. And it really shouldn't be any different for healthcare.
I'm so glad you brought that up because it is important. I'm going to address the issue of what insurance pays for in a moment. But think about it this way. Insurance companies give you co-pays to kind of make you feel good. Say, okay, well, instead of paying the doctor $100, I only pay him $60. Most people can afford the $100, and it's other things you're worried about. But think about health insurance in the same way that you think about car insurance. Buy car insurance, you have a deductible. When do you use it? You don't use it to change the oil and rotate the tires.
Right.
You don't file a claim when you do a 30,000, a 60,000, or even a 100,000 mile checkup. You want your auto insurance company there by your side when you have an accident that has significant thousands of dollars of damage to your car, which you need to go back and forth to work, or you have personal injury, bodily injury as a result of it. Those are the kinds of things. It's a catastrophic event. Health insurance is no different. People say to me all the time, my health insurance company doesn't pay for anything. They don't want to pay for anything,
right,
except when you get into a catastrophic situation. So what are you looking at? And people say, well, the obvious things, cancer, stroke, heart attack, those kinds of things that are the common and most expensive kind of things. But think about this. Tomorrow, Katrina, you could develop intestinal gas. And you take the over-counter stuff and it doesn't go away. The next day, you feel really bad and you're bedridden. Finally, on the third day, you come to your senses and you go to a doctor or you go to a clinic and they do some testing and they say, you know what? It could be an infection in the wall of your intestine or it could be an your appendix. Go to the emergency room. Go to the emergency room, you check in at 3:30, they do a whole bunch of tests, and at 6:30 they reel you into the operating room because you're about to experience an emergency appendectomy. When you get out of the hospital, the bill's about $30,000 in Tampa, St. Pete. And you've got a deductible, an individual deductible, it might be $2,000, $4,000, $600. You stop paying at $6,000, whatever your deductible is, the insurance company's going to pay the balance. Now, they're not going to pay $30,000, they're going to negotiate with the hospital.
Right.
But that's between them and the hospital. You want the catastrophic coverage.
Right. Which, that could wipe somebody out financially if they had to pay that, which makes sense for the insurance, forced insurance, I should say. How does FSA play a plan? Like, do you set up FSA in combination with these where it's like a flexible spending account?
No, flex spending account doesn't come into play in individual health insurance.
Okay.
What people should be looking at is a health savings account. Let me just talk about plans organization for just a minute and costs. Plans now are organized in one of two ways. Deductible only, which means that you pay for all services, including doctor visits, until you hit your deductible, or they have copay plans where there are some copays for doctor's visits, some copays for diagnostic work and all that sort of stuff. But the copay plans are fewer in number, and the deduct-only plans are much higher. That's what people are going to experience in the marketplace.
Gotcha. So how does a health savings account differ from the FSA?
Health savings account basically is an account you set up with your bank. You have to have a plan. An insurance plan that is HSA eligible, but you set up a bank account and basically you put money in that account tax-free. It's pre-tax dollars, and then you pay your medical expenses. You can't use it for the premium, but you pay your medical expenses out of it. It's tax-free going in, tax-free coming out.
So it works a lot like the FSA.
Yes, and whatever money is left in that account at the end of the year rolls over. So it's kind of like a 401k in a way.
Where FSA, it doesn't. You have to use it all.
Exactly.
Gotcha.
Yep.
You're listening to Tampa Home Talk. I'm your host, Katrina Madewell. We're in studio today with John Barie with JB Healthcare Solutions. We have to take a quick break. When we come back after the break, we're going to give you guys some real live examples so you can see if you're this age, this number in your family, what you might pay in the open market for insurance, which you're now required to have under the Obamacare Act. Welcome. We'll be back in just a minute. Hang tight.
Ask me about an inside secret to save several hundreds of dollars on your annual homeowner's insurance premium. Text the word WIND, W-I-N-D, to 813-377-2775. Again, 813-377-2775.
Are you suffering from IRS problems? Do you owe back taxes you can't pay? Is your paycheck or bank account being levied? Or maybe you haven't filed tax returns in years and simply don't know what to do. This is Darren T. Mish to tell you that if you're tired of IRS problems hanging over your head and are ready for a fresh start, we may be able to help. Call the law offices of Darren T. Mish at 888-GET-MISH, 888-GET-MISH. I can help you file old tax returns, work to release tax liens or stop wage levies, even negotiate deals to pay off back taxes at a discount, sometimes for pennies on the dollar. Hey, let's face it, these days it's not hard to get into tax trouble. A divorce, failed business, health problems, you name it. The point is, IRS problems may be solved if you're willing to take the first step. Call for a free consultation at 888-GET-MISH. That's 888-438-6474. Or go to the web at getirshelp.com, because the one sure thing is, IRS problems don't solve themselves. So get MISH. 888-438-6474. Principal Office, Tampa.
Welcome back to the show. You're listening to Tampa Home Talk. If you've missed any part of today's show talking all about the required Obamacare insurance, if you're someone in your new 20s all the way to like pre-65, this show may likely apply for you, especially if you don't have group insurance. So you can hop on over to tampahometalk.com. We're also on Facebook and on Twitter, and we can hook you up with John Barie. And we also will host the entire show on a podcast. So if you're listening to part of it, you're getting in and out of the car, you want to catch the whole thing in its entirety, there's a lot of really great details that we had on today's show. And during the break, we were actually talking about one little detail that got missed. So chime in on that, John, and then we'll talk about the examples like we promised.
Yeah, we did talk about that short-term medical plan as a gap insurance between events where you might lose some coverage or not be eligible for Obamacare. One of the features there is that the insurance company is going to ask you and health questions and deny it, but there is no maternity and newborn care. In Obamacare, there's some mandatory essential health benefits. Maternity and newborn care is universal. By the way, all insurance now from Obamacare gives each individual one annual wellness preventive visit. Think of it as a physical, free of charge, not a penny to you, no copay. And that includes Pap smear and mammograms for women, and it includes prostate screening for men, and also colorectal cancer screening for both men and women.
Gotcha.
That's a universal benefit, cost-free.
So
to
no
everybody.
copay included in your insurance, included in the cost, like take advantage of it kind of thing.
That's correct, yes.
Which is nice because that can set you up for maybe seeing something that you wouldn't see. Does that include like blood work and that kind of stuff too?
It does, and the whole idea is preventive, is to get everybody to do that so that you've got some warning about what might be happening to you with your health, and it's an early warning sign, and that changes the whole approach to treatment.
From a healthcare state, from the insurance company's perspective, that can also save them a lot of money if they catch stuff early, and it could keep you from having a heart attack or whatever.
Correct.
So it's kind of like a win-win for
Oh,
everybody.
yes. Oh, yes, absolutely. And that's why people, as soon as they sign up and they're eligible, they ought to go to their PCP, their primary care physician, and sign up for your annual wellness visit.
So let's give a couple examples, like pretty wide range examples for the person listening. That way you can get an idea where you might be if you're looking to purchase an individual group insurance or individual health care insurance.
Okay, sure. Let's talk about on the marketplace, which is a common phrase. On the marketplace basically means is that marketplace is the catch-all phrase. On the market means you are getting a subsidy. You have signed up, and you've got your determination. You are getting a specific dollar amount from the insurance company. Again, based on household income. So here's an example. A single female, she happens to be in her 50s, and her adjusted gross income is $19,143. Applying for health at the health insurance marketplace through healthcare.gov, we determined that she was eligible for a subsidy of $369. That's a pretty significant amount of money for someone whose adjusted gross income
Right.
is just under $20,000. She then has 4 options, which I priced for her, ranging from what she would pay out of her pocket. The lowest would be $69 a month. The highest would be $190 a month. Now, she's likely to take the $69 version, but there are options for her. But that's a pretty good deal. She gets $369 a month in subsidy. She pays about $70.
So
Okay.
real quick, what's the difference in those plans? I know there's a lot of details that they can connect with you later, but 69 to 100 and something, what's some of the things they can
Deductible is the first one.
Okay.
And this principle is universal in health insurance. The higher the deductible, the lower the monthly premium. So that's variable number 1. Variable number 2 is it a deduct-only plan, which means you're paying for everything until you hit your deductible, or
Right. It's like
is it
insurance doesn't even kick in until you get to that point.
exactly, or are you getting some copays, that sort of thing?
And
So-
that's not carried over year after year.
no,
Once you hit
that's
your
a
copay. You've
your
got to
co-
start over.
You
and
start
over.
out. Your deductible
Right.
is an annual deductible. Yeah.
So what's the
Okay.
next example?
Again, on market, a subsidy. This is a family of 4. There happen to be 2 adults in their 50s, 2 teenagers. The adjusted gross income for this family is $45,000 in round numbers. They are eligible for a subsidy of $977. Their out-of-pocket cost would range from $96 to $290 a month over 4 options.
That's pretty significant, that subsidy.
This is where the Affordable Care Act kicks in. Okay, I mean that's what the definition of affordable.
I mean, even if you had group insurance, you would likely be paying more than that $200 and some odd a
Most
month.
likely, yes. Yep.
So when you think about, if you break that down, that's $70 some a week.
Yep.
It's pretty affordable.
It is pretty affordable. Let's do a off market where you're just buying it basically. Here's a single female. She's 60 years old, non-smoker. Her prices would be somewhere between $547 and $629 a month. Again, I've looked at 4 options for her.
So this for income is way up there.
Yes. Single male, 52, non-smoker, $398 a month to $511 a month. Family of 4 who are not eligible for a subsidy. This couple is in their 30s. They have 2 girls, age 8 and under. Their cost, they're non-smokers. By the way, all of these people here are non-smokers so far. Their cost would be between $834 and $1,047 a month.
So those price ranges can get pretty significant.
Oh, yes.
So get creative with your healthcare options. I would highly encourage you to hop on over to our website at tampahometalk.com. Catch us on Facebook and Twitter. You can get John Barrie's contact information. Have a conversation with him in private. We know that would obviously be preferred versus on air. Thanks for rejoining us again for the show this year, John.
It's my pleasure, and I'll just say to anybody who wants to call, you can get my number on the website, and we can accomplish a lot in about 5 to 10 minutes on the telephone.
Awesome. Thanks so much. You're listening to Tampa Home Talk. Catch the show in its entirety, Facebook, Twitter, across the web, and we're on a podcast. We appreciate you chiming in this week. We'll be here same time, same place next week. For this week, we're out.